I don't know about you, Alex, but I found 2025 frustrating and a bit of a disappointment. I think the budget late 2024, where there was an increase in national insurance for companies across the piece, had an impact on the economy. That then filtered through to confidence in the property investment market. So it was frustrating. I think we then had Trump's tariff day in April, which had obviously longer economic effects. And then everyone was worried about the budget in 2025. So yeah, a year of frustration and disappointment. It didn't really get going.
I think the key factor was the economy, the political goings on at the time. We had a new government bounce H2 24, so we all felt a bit better. And then reality kicked in with a couple of budgets, certainly the spring budget 25. Putting the late autumn budget in November had a massive effect on the market, where investors were just lacking confidence, and inertia set in a bit last year. Let's hope that now we're going to 2026, a bit more momentum, and we can see things moving forward.
And I think, we had thankfully an interest rate cut in December 25.
Yeah, that should help.
And I think Andrew Bailey at the Bank of England will really get a grip of this. And we will see a couple of cuts in H1, which will kickstart the economy. It'll filter through to cheaper lending, 5-year swaps will fall, and that will kickstart the property investment market, which the lending piece has probably been missing a bit.
Here's hoping, yeah.
I see an opportunity in offices. I think they look appealing. They've been much maligned over the last couple of years, and you have to look forensically town by town. But I think with the general psyche of back to the office for staff, probably 4 or 5 days a week, offices need to be attractive to staff to come back. And there is a shortage of offices in so many towns. If you think about it, outside of London, there really hasn't been many offices developed in the last 6 years. A lot of offices that were secondary, tertiary went to residential. So there is some shortage of good offices in a lot of towns and cities across the country.
Yeah, I don't disagree.
And I think, there are opportunities now where 2 to 5 year income is double digits. And if we're in a world where yield compression is tougher, that initial yield is attractive.
I don't disagree with any of that. Hopefully you're right. But I think I said the same thing last year, but my money will be going into retail this year. I think retail has had a battering over the years, whereas more recently, rents have been slashed, vacancy rates are down. The government seems to be helping with small businesses on the rate side of things. Internet sales seem to have plateaued a little bit. So I think if you can go and get decent high street retail, 8-9%, I think that represents very good value. And I think that's where the clever money is going to be going into in 2026.
You've heard my positive thoughts on offices. Another area we're seeing, and a trend we're seeing from our residential colleagues, is a number of buy-to-lets being sold. Landlords fed up with increased admin, increased tax, Renters' Right Act coming in 2026, in May 26. That will fuel, if they are sold, for them to replace that money and invest in possibly retail, possibly industrial. I like the retail sector like Alex. I look at retail where rents are at half the rate that they were perhaps 20 years ago. Yields are from 5% to 8%. You calculate both those calculations through. Retail is at about a third of a value as it was 20 years ago. So I think a number of buy-to-let investors will look at the retail sector from a lot size point of view and see it as relatively attractive, where they can get 4 rent checks a year, full repairing and insuring leases, and have a bit of an easier life.
I think one trend which we can't shy away from is the political trend of the May elections coming up, and possibly having a new Prime Minister and a new Chancellor come the end of May, which could have huge ramifications on the property market going forward. Economic-wise, inflation, interest rates, we've touched on that. Hopefully that's all going in the right direction. We can control inflation and get interest rates down, which hopefully will bring some more investor confidence. I think it's a year of confidence. Last year, total lack of confidence. This year, we're hoping that investors are happy to get their checkbook out. Banks will start lending again. Swaps might come down. Hopefully, LIBOR comes down as well. And suddenly, there's a bit more impetus into the market. The big trend on the sector we haven't touched on again is also data centers. I dipped my toe in the water with data centers last year. It is a booming sector and only going to get bigger and bigger as more money is coming in from the States. So that's one to watch for me.